Let's go to some stock picks. Skalk, Remgro.
Yeah. Okay. What David, you said last week, this one comes with a bit of a health warning. And the health warning is not Remgro, because it's still one of my most liked stocks. Came through a period now for the past 2 weeks where we've seen most of, let's call it the major fund managers, African. And the one golden thread that came through out of most of them is how they're still positive on South African companies, more specifically SA Inc. companies. So the moment I look at SA Inc. companies, I do think that Remgro is one of those companies where you can, it's like the mentioned shampoo, the 2-in-1. You buy one share and you get Mediclinic, you get Outsurance, Discovery, First Rand, you get so many other companies. Plus, I've told you 2 weeks ago, I mean, my favorite word is free. My second favorite word is discount. This company is currently, as we sit here, trading at a 40% discount to its intrinsic value. Prior to, let's call it pre-COVID, we're trading at a less than a 20% discount. Do I think that it will go back to the 20% discount? No, I think it will take time. But as I mentioned earlier, this Raynet play is an interesting one. They've got the same, let's call it, main players behind them. This could just be something to have a look at. If somebody like Raynet went and said they unbundled all the main crown jewels to unlock value for shareholders, just watch Remgro as well.
Okay, we'll keep an eye on it. David, RSA long bonds.
Yeah. We were talking about inflation. You can still get those 2040s at, they were 11.5% clean yield. In other words, that's the yield you get. I think it's down to about 9.5%. At 9.5% with inflation at 3.6%, I can live with that. And this will take you right through to 2040. You don't have to do anything. You can just sit back and get 9.6%. Yeah, inflation might take a little bit away of this purchasing power, but this is tradable, and that I still think it's one of the most attractive areas of our market are still the long side of the bonds. Yeah, it's a bit short. Your short dated, your 10 years are now fallen below 8, I think, or below 9. Nah. So, you can extend it a little bit. Don't be worried about holding bonds and that. They're tradable, can get out. And if the rates do come down, you make a little bit of a capital profit there as well.
Yeah,
still attractive.
And a 6% real yield is real, is absolutely in a 3% inflation environment. That's all for Stockwatch today. Thanks to our guests, Shalk Louw, PSG Wealth Old Oak, David Shapiro, Sasfin Securities. Up next, the close.
Stockwatch is brought to you by Merchant West. Where others stop, we push further. Because we believe business as usual doesn't lead anywhere new. Go beyond with Merchant West. Finance, invest, insure.